is PBS.
Aha! Watching Oregon Public Television again. I knew you had good taste, and I hope to see you again every Saturday at 4 p.m. for the Woodwright Shop right here on OPB.
John Ferguson is going to prison. He hasn't been convicted of a crime, but a CEO of the world's largest private prison company, and with no corrections experience, he sentenced himself to 4 days working as a guard in a New Mexico women's prison.
Swing those hips, swing those arms.
This room keeps getting bigger.
Can John survive in the big house? Find out on the next Back to the Floor.
That's tonight at 10:30 here on OPB.
Join Antiques Roadshow UK and explore Great Britain on a quest for the rare and imaginary.
That's quite a zany design, isn't it, to say the least?
It's dazzling colours.
We'll get you to Great Britain and back in under an hour. That's Antiques Roadshow UK.
That's Saturday at 7 here on OPB. Business partners, Northwest Senior News and Hot Pepper have made a contribution to the OPB Program Fund for Excellence. Additional funding has been provided by you, the contributing members of OPB.
Hi, I'm Casey Cowan, host of Oregon Art Beat, inviting you to join us for some spectacular programming brought to you through the particular efforts of OPB. OPB staff have worked on more than 30 hours of primetime programming this summer. We're proud that these shows are also being aired on PBS stations across the country. From the beauty of legendary lighthouses to the majesty of our great lodges, from the triumphs and tragedies of life in America today, OPB is proud to present these programs to the state and the nation.
Less than a century ago, most of us lived in small towns. Now, only 1 in 4 of us does. Monday night at 10, Oregon Small Towns invites you home to see how things have changed and how they've stayed the same.
Here on OPB, Monday night at 10. Funding for local broadcast of Nightly Business Report has been provided by viewers like you and by the following. Union Bank of California, proud to support the Pearl Arts Foundation. Regents Blue Cross Blue Shield of Oregon, providing health care benefits to more than 1 million people and serving Oregon and Southwest Washington for 60 years.
Business Report is brought to you by
Markets may rise or they may fall. Who helps companies prepare for the unpredictable? For business advisory services, the answer is the people of Deloitte & Touche.
Franklin Templeton Investments, providing a perspective for success through Franklin, Templeton, and Mutual Series funds. Franklin Templeton Investments, gain from our perspective.
A.G. Edwards, combining tradition and technology to serve clients' investment needs. A.G. Edwards, trusted advice, exceptional service.
Good evening, everyone. Red ink on Wall Street is flowing over to Washington. The White House said today that the U.S. government will post a deficit of $165 billion this year, the first shortfall since 1997. It appears that the plunge in stock market prices is impacting the U.S. Treasury just as it has American investors. Darren Gersh reports.
The Bush administration blames most of the bad budget news on the sagging stock market.
Budget Director Mitch Daniels says taxes on stock options, mutual funds, and capital gains are off $80 billion from this time last year.
This is a new, I think, important phenomenon we're all going to have to understand much better. No one, as far as I know, really saw this coming.
Democrats say this is exactly what they predicted would happen. They say the president's tax cuts left little room for any economic bad news.
This is a clear editorial on the fiscal policies of this administration. I have said before that it was a disaster. I think the numbers today demonstrate why I believe that.
In February, the Bush administration projected this year's deficit at $106 billion. It now puts the red ink at $165 billion this year and $109 billion next year. If the economy recovers and spending is kept under control, the administration sees a balanced budget returning by 2005. But the tight budget is setting up a battle of wills between Congress and the president. $30 billion in emergency spending needed to fight terrorism was derailed today after the administration demanded Congress shave off 10% of that. Even Republicans were upset.
This is blind adherence to a line that was established, a crazy line in my opinion, not without regard to the needs of the country at all.
Budget experts say the bigger battles may come a year or two from now when the economy should be stronger and the war against terrorism is winding down.
And the question is, are we putting in place spending programs, additional interest payments, those types of things, lower taxes? That'll make it very difficult to pull ourselves out of the deficit when we need to do that.
For next year's budget, the Bush administration says it will try to do a better job understanding how a bearish or bullish stock market affects Uncle Sam's bottom line. Darren Gersh, Nightly Business Report, Washington.
Wall Street's blue chips opened in a steep sell-off triggered by an unexpectedly big drop from 92.4 to 86.5 in the University of Michigan's mid-July Consumer Sentiment Index. Merrill Lynch's downgrade of Home Depot seemed to underscore concern that consumers are pulling back. By 10 a.m., the Dow Industrial Average was down 134 points, but the NASDAQ index was off only 1 point thanks to Dell Computer's earnings estimate boost we told you about yesterday and Juniper Networks' positive outlook today. The NASDAQ's resilience helped the blue chips rebound, and so did GE's solid second quarter earnings, which we'll detail next. By 11 a.m., the Dow had a 27-point gain, and the NASDAQ also was up 27 points. Selling pressure picked up in the afternoon, and normal pre-weekend weakness contributed to a closing loss in the Dow Industrial Average of 117 points exactly. That's 1.3%. It now stands at 8684.53. The Dow fell in every session this week, tumbling 694.97 points, or 7.4%. That is the worst weekly showing since the week after September 11th. Today, the NASDAQ Composite fell only 0.93 to 1373.50, but it was down nearly 75 points, or 5.2% for the week, its worst decline in nearly 3 months. Big board volume simmered down from yesterday's pace to about 1.6 billion shares and about a 9-to-7 ratio of down volume over up volume. The Dow Transport Index off just over 25 points, nearly an 8.5-point drop in the Utility Index, and the closing tick neutral at plus 42. Standard & Poor's 500 off nearly 6 points, just over a 4-point drop in the 100. The mid-cap 400 off just about 3 points. CRB Futures Price Index now 1.41, a loss of 3 1/4 in the New York Composite Value Line off just over 1 3/4 points, almost a 3.5-point drop in the Russell 2000 small cap, and the broadly based Wilshire 5000 off 48.5 points. That big drop in the Consumer Sentiment Index lifted the bond market, although June retail sales rising a better than expected 1.1% kept buyers from being too aggressive. The late sell-off in blue chip stocks, however, caused a pickup in buying as tax-free and corporates ended with 1/4 to 3/8 point gains, and treasuries also closed with solid gains, an 11 32nd rise in the 5-year note, the 10-year note up 16 32nd, 30-year bond rising 21 32seconds, and the Lehman Brothers long-term treasury bond index up almost 2 points. I'll be back shortly to show you where the action was on Wall Street today. Susie.
As you said, Paul, General Electric's second quarter earnings were right in line with estimates. The huge conglomerate made 44 cents a share. That's up from 39 cents in the same period a year ago. And GE's chairman, Jeff Immelt, told analysts on a conference call that he stands behind those numbers, knowing it's critical to have the trust of investors. Well, the trust is critical not just for General Electric, but for all American corporations. The key question these days amid the Enron and WorldCom scandals is whether investors can trust the earnings numbers from corporate America. Scott Gervey went looking for answers.
Earnings consistency is a big deal at General Electric. The company prides itself on meeting Wall Street expectations quarter after quarter, year after year. GE Chairman Jeff Immelt says we can trust these numbers, but in today's climate, investors are questioning everything, something experts say is a panic reaction.
We think by and large the vast majority of companies have good accounting procedures, they're honest, and investors can take them at face value. We think if there are any more bad apples to pop up, it would be in the next few months. After that, this is going to go away.
At any company, a quarterly earnings report is a summary of every transaction made during a 3-month period. At a giant conglomerate like GE, this is hundreds of thousands, if not millions, of individual entries. Each one needs to be classified: sale or purchase, capital or operating, special one-time or ongoing. These are judgment calls made by human managers, checked by internal auditors, reviewed by the outside auditors. Investors and analysts have little choice but to accept the numbers presented. The underlying decisions are only as good as the people who make them. If outside auditors fail to challenge questionable results, or are denied access to data, or simply lied to, there is little recourse. Wall Street accepts that any company can manage earnings to the tune of a few cents here, a few cents there, but large-scale fraud will eventually be discovered, usually later rather than sooner. In spite of the headlines, it should have a limited impact on earnings.
We have to remember that it's a relatively small number of companies where this has been an issue, and that not all of them get it yet, even with what's transpired. So will it affect some companies? Yes, but will it affect the aggregate numbers? Not meaningfully.
The best advice for investors is to be aware of companies that greatly outperform their peer group. It could be because they are terrific at what they do, or it could be something else. Scott Gervey, Nightly Business Report, New York.
Late today, mortgage giants Fannie Mae and Freddie Mac announced they will register their common stock with the SEC. The move gives investors more access to the company's financial data, including 10K and 8K forms over the internet. Until now, Fannie and Freddie have been exempt from most U.S. securities laws since they operate under special congressional charters. Another late afternoon letdown on Wall Street, and for the 5th consecutive day, the Dow Industrial Average on the downside, today losing 117 points exactly, down 695 points for the week, or 7.4%. Broader market lower by a 19-to-13 ratio and only 24 new yearly highs, 125 new lows. Home Depot topped the active list on 37.3 million shares, traded as low as $28.40 after Merrill Lynch downgraded it from strong buy all the way down to a neutral rating. General Electric, however, responding to those good earnings, 14% higher in the second quarter than last year, up $1.25 on the stock. Lucent Technology, a 21-cent gain. EMC up 40 cents. AOL Time Warner down 56 cents. The company's looking for a new chief exec at its internet unit. Duke Energy falling $3.20. The company said it received subpoenas from federal regulators about its energy trading practices. Pfizer down 40 cents. AT&T moved up 28 cents. And then Tyco International losing 87 cents. 10th in big board volume. Ford Motor down 57 cents a share. Accenture Limited down $1.45. Company's third quarter earnings were up 9.2% at 27 cents versus 25 a year ago, penny above the street estimate. But the company said its fourth quarter revenues will decline. Clorox down $1.22. The company's retiring chairman says he's going to sell up to 850,000 shares to diversify his assets. Lockheed Martin and a weak defense group today down $3.81. Lowe's company's off $3.02 following Home Depot lower. And, of course, Jeffries brokerage downgraded Lowe's from buy to just a hold. Procter & Gamble down $2.32, although the chief financial officer denied rumors circulating today the company's having or has accounting irregularities. It said no truth to that. Walmart down $1.33 in the weak retail sector. A.O. Smith, which makes electric motors for air conditionings and auto parts and things, up $4.12. Second quarter earnings 66 cents. That's up from 45 cents last year. Street was only expecting 49 cents, and sales jumped 25%. Roper Industries up $2.88. The company has withdrawn a 5 million share proposed stock offering because of poor market conditions. Vizix down $1.70. Second quarter earnings came in at 11 cents lower than expected, and revenues declined 25%. Bank of America downgraded Vizix from buy to just market perform. Zale, the big jewelry, down $5.29. Company had much lower than expected second quarter earnings of only 14 to 17 cents. That's what it's predicting. The street was expecting 24 cents. Senior housing properties down $2.10. Merrill Lynch downgraded it from buy to long-term neutral. And NUI down $3.18. The story here, the company sees 17 to 20 cents in a third quarter loss versus a street estimate of earnings of 10 cents, and the company cites poor energy trading results. NASDAQ trading down 0.93 for the week. It dropped nearly 75 points or 5.2%. Trading volume just over 2 billion shares. For every 15 stocks higher, 17 lower. Microsoft topped the active list off $1.05. Earnings due out for the fourth quarter next Thursday. Intel, a loss of 26 cents. Cisco Systems managed to rise 33 cents. And then Dell Computer gaining $1.10 after the close yesterday. As we mentioned, second quarter earnings were raised by the company from 18 to 19 cents. KLA 10-Core lost a penny a share. Applied Materials up 25 cents. Amgen dropped 11 cents. QLogic, 36-cent gain. Oracle, a 26-cent gain. And then Xilinx, 10th in dollar volume on NASDAQ, was down 30 cents a share. Nextel Communications up $1.08. The Morgan Stanley brokerage reduced the company's estimate for a loss this year from minus 101 to just minus 89 cents. And then Mentor down $7.83 and Inamed off $3.64. Two congressmen want these two companies to provide records of their breast implants because of the number of women who have had to have replacement operations. The American Exchange Index down 24 1/3 points today, and for the week it dropped 35 1/3 points or 4%. Five-Star Quality Care dropping $2.14. Company sees a loss in the second quarter of 80 to 90 cents a share. Street was looking for earnings of 9 cents. The company cites rising insurance costs. And Cross Media Marketing down $2.17. This company's second quarter is expected to show a loss of 11 to 14 cents. They had earnings 20 cents a year ago. And finally, the index shares. Not all on the downside. NASDAQ Qs managed to hold steady. And that's our Wall Street wrap-up. Susie.
Thanks, Paul. Well, here's a lesson many Americans learned as kids in a Boy Scout or Girl Scout troop: be prepared. But it's also a lesson for corporate executives to be prepared for the uncertainties they might face. As Diane Estabrook reports, being prepared has made the difference for one Midwest company now facing a terrible loss.
Julie Smolansky credits adrenaline for helping her run Lifeway Foods the past few weeks.
Yes, we're still moving ahead with that.
The 27-year-old was thrust into Lifeway's chief executive post one day after her father, founder and CEO Michael Smolansky, died suddenly from a heart attack last month.
Well, as much as I would not like to have, had to deal with this so quickly, I was very prepared, very well ready for the job and the task.
Mike Smolansky, a Ukrainian immigrant, founded Lifeway Foods 16 years ago. The company makes a line of functional foods that includes a yogurt drink called kefir. Lifeway products are sold in 10,000 stores in 50 states. Sales are expected to top $12 million this year. Smolansky brought Julie into the business 5 years ago as his marketing director, but he also began teaching her all facets of the business and named her his successor. Julie says that preparation helped her deal with everyone from employees to investors in the hours and days after her father's death.
I needed our employees to feel comfortable with me. I needed investors to feel comfortable with me, and to reassure them that the strategy, the business will continue.
Experts say Lifeway may be the exception to the rule when it comes to succession plans at small businesses. Many executives don't even think about dying or consider the impact it would have on their companies.
It isn't just the question of who's going to be king. It's a question of who does all of the other work. And I mean management work. I don't just mean details. There's a lot of strategic thinking that has to go on.
He'd say he'd stick to that price increase by 8% this year.
Julie's 22-year-old brother, Edward, has become her right-hand man, as well as Lifeway's finance director. The two spend 16-hour days wading through their father's files and trying to carry out his vision of making kefir as popular as Coca-Cola.
I expect a lot out of this company, and I think that Lifeway will grow even beyond his dreams. beyond my dreams.
Diane Estabrook, Nightly Business Report, Morton Grove, Illinois.
Monday, profiting from plants, how an Indian medical system could mean big bucks for U.S. pharmaceutical firms.
A big week coming up for earnings news. Over a dozen Dow components will be reporting, including IBM, Intel, and Microsoft. Our Friday Market Monitor guest is James Stack, president of Investec Research. On the economic calendar, Tuesday, Fed Chairman Greenspan begins his semi-annual monetary policy testimony to Congress. Wednesday, the Fed Chairman wraps it up, and we also get June housing starts. And then on Friday, it's the Consumer Price Index.
My guest market monitor this week is Bernie Schaefer, chairman of Schaefer's Investment Research Incorporated, the publisher of the popular monthly Option Advisor newsletter, which also sponsors his popular website. And welcome back, Bernie.
Good to be here, Paul.
You know, with this kind of volatility we've been seeing in the stock market recently, it's got to be an option trader's dream. It's got to be what you hope for forever. Up and down, wonderful for option trade. But in the bigger picture, Bernie, what does it mean? Are we approaching a bottom? Is it the beginning of a big down move, or what?
Well, the market has a footprint or a fingerprint, so to speak, of when it declines sharply, the volatility of the market increases. That's just the way it is. So now people look at this volatility. They look at the CBOE volatility index, the VIX, and they say, wow, it's really increased significantly from where it was before. Does that mean we have a bottom? Because bottoms are associated with increases in volatility.
What do you think?
The key, as I see it, is it's not just the volatility, but is the sentiment getting to the extreme that you like to see at a bottom.
Okay.
And for example, the sentiment as reflected in the CBOE volatility index is not nearly as bearish right now, even with this horrible week that we just had in the market.
So we could get a pop up here?
We could get a pop, but the point is the ultimate bottom from our sentiment indicators is not in place. There's actually bigger call activity lately on the QQQ, on the OEX indices, than put activity. Not consistent with a bottom, as I see it.
All right. And last time you were with us, November 30th of last year, you said Dow 7,500 a distinct possibility. You still believe that?
I think Dow 7,500, maybe even 7,000. Our target on the S&P is 775 to 800. That's about 50% off the highs. But compared to other bear markets, given the fact that we went up over tenfold since 1982, a 50% decline from top to bottom is not...
Almost normal.
I would say it's almost normal after a big pop.
Last time you were with us in late November, you were short-term bullish. You recommended 2-month calls on Juniper Networks, Symantec, and NVIDIA. They all did very nicely, went up. I hope you took your profits. I'm sure you did. And the long term, you were negative. You recommended 3 to 6 month puts on General Electric, AOL, Time Warner, Schwab, and JP Morgan, and they're all way down, so you must have profited nicely on those puts.
It was very nice trades. And option premiums were low then, so that was nice,
I
too.
congratulate you. What's the strategy now? You're still bearish, but how about the short term?
Short term, we could see a bounce, but I don't think it's playable except for scalpers and real short-term traders. I still think the play is on the put side. I think we got some significant downside in the market. I go out 6 months to January 2003. I've got some put and call plays for you for 6-month options, and I can run down
Let's
those
have
plays.
the puts. That's what you favor.
Okay,
here.
the puts is what I favor. I have 5 of them. Microsoft, which
you own?
I have a position in on the put side.
You and your company?
Correct.
Yeah.
Verizon and GE.
Right.
Verizon, I have a position. GE, I do not.
Okay.
JP Morgan to the downside on the put side, have a position. Merrill Lynch, put side, no position.
Okay. What about the call, just short term? Just we can't shortchange the bulls.
Well, 6 month out again to January. I'm counter trend gold stocks I'm bullish on. So
Okay.
I like Newmont Mining. I have a position.
Okay.
And I also like Krispy Kreme Donuts, a nice mid-cap restaurant type grower.
Also volatile. You like that sort of thing.
Have a position.
Yeah.
And General Motors have no position. Nice dividend yield of 4+%, some long-term price support there.
So pretty much the same as last November when you were very short-term bullish and right, and then long-term bearish, which was right.
I think that, yes, and I think the play for here is to the bearish side, but a little bit longer out.
All right. Bernie, thanks very much for being with us again.
Pleasure, Paul.
My guest, Bernie Schaefer, chairman of Schaefer's Investment Research.
And recapping today's market action, another gloomy Friday for the blue chips. The Dow falls 117 points and the Nasdaq loses about a point. And please be sure to join us at our worldwide website, nbr.com. And finally tonight, it isn't often that your food talks back to you, but the folks at H.A. Heinz think that's a pretty good idea. So they're rolling out a set of what they call talking labels for their ketchup bottles. The labels don't really talk, but they have irreverent, snappy sayings like, "Are your French fries lonely?" and "Your fish stick improvement system." The unusual bottles will be available on store shelves for just 3 months, so you can choose your ketchup in funny or unfunny varieties. And Paul, Heinz wants people to submit their own ideas in a contest called Say Something Ketchupy.
Oh, okay. Catch up on all your business news with NBR.
That's a good one. Here's another one I think is kind of cute on this Heinz bottle, and it says, still available in reds. I think that's kind of cute.
Unfortunately, the market is too.
Yes, unfortunately it is. That's Nightly Business Report for Friday, July 12th. I'm Susie Garov. Have a great weekend, everyone. Same to you, Paul.
And you too, Susie. I'm Paul Kangas, wishing all of you the best of goodbyes.
Nightly Business Report is brought to you by Franklin Templeton Investments, providing a perspective for success through Franklin, Templeton, and Mutual Series funds. Franklin Templeton Investments. Gain from our perspective.
It's an automated, wired, digitized, push zero for more options world. Who can help business make sense of it all? For professional services, the answer is the people of Deloitte & Touche.
A.G. Edwards, combining tradition and technology to serve clients' investment needs. A.G. Edwards, trusted advice, exceptional service.
And made possible by viewers like you. Thank you.
This week on Now with Bill Moyers, there's a battle brewing in the Muslim world, and NPR's Deborah Amos finds out how Muslims in Egypt feel about America and Israel. Watch this special edition of Now with Bill Moyers.
Nightly Business Report has a video for anyone who's thinking about investing in stocks. It's How Wall Street Works, winner of the American Film and Video Festival's Blue Ribbon Award. To order by credit card, call 1-800-535-5864.
Funding for local broadcast of Nightly Business Report has been provided by viewers like you and by the following. Union Bank of California, proud to support the Pearl Arts Foundation. Regents Blue Cross Blue Shield of Oregon, providing health care benefits to more than 1 million people and serving Oregon and Southwest Washington for 60 years.
This week on Now with Bill Moyers, a special edition. There's a battle brewing in the Muslim world.
This isn't a clash of Islam versus the West. This is Islam versus Islam.
And NPR's Deborah Amos finds out how Muslims in Egypt feel about America and Israel.
How can you defend the United States?